we doing out there? What's up,
Hey guys.
guys? All right. Today is the 26th of June. You have just stumbled upon Ready Set Live with Doc and Mav here with Ready Set Crypto. Welcome aboard, everybody. As Bitcoin approaches 14,000,
Ooh,
and it may happen. There we go.
so bright, so bright.
It may happen while we're on the phone or on
That was
today's broadcast. Yeah. Where's your you got to shave your head though if you want to do it right.
Yeah.
Maybe that's a new role for me. How's everybody doing out there? Great to see everybody. Hello. We have the market in beast mode today. Hey, hey Mav, I got something really important to share with people. Today is a very special day.
All right. See ya.
Yeah. No, I'd like you to look behind me, and guess what? I have fixed. For all you OCD people out there that have really been bothering you for the last several months with the Ready Set Crypto being backwards, I have found a way to straighten it out. About time. I apologize for all of the tension that you felt watching our broadcast, but we're all screwed.
Personally attacked.
Squared away here. Yeah. I've triggered the OCD. Hey, we got a lot to talk about today. We're not going to be just joking around here. Let's get serious for a minute. We obviously have the market in runaway mode, and we got a couple of things that we want to talk about. I actually have a little bit of a little presentation for you guys today.
Uh-oh.
Yeah, a little bit of death by PowerPoint. I swear to God, it's not going to hurt.
Power corrupts. PowerPoint corrupts absolutely.
Yeah, that's good. Well, let's see. Hey, Darth Mark, how we doing out there? Let's see. Jorge to the moon. That's awesome. Okay, Good. We'll be taking your questions a little bit later. What I want to do here is I may as well just get this out of the way right now. And one of the questions that a lot of people we're seeing in our Omnia space, we're seeing people, quite honestly, struggling, trying to figure out what to do at this point if they're not already long. Raise your hand out there if you're not already long. That's okay. You don't have to do that. I don't want to rub it in anymore, but it's like, it's a real problem right now. If you're not, look, let's face it. Nobody's as long as they want to be right now. Nobody has a big enough position size that they want to be, but that's okay. That's normal, right? These things are not supposed to feel good when you enter them. You're not supposed to have any kind of degree of confidence when you enter them. It's supposed to feel bad. And that's part of the, people right now are looking at this and saying, man, I've got to enter now. And this is absolutely the worst thing you could possibly do. So I just want to put that on the table, like FOMOing and chasing after this. So even though you'd say, hey, if I just entered this morning, I'd be at 12,000, and right now I'd be up $2,000, so, Doc, what the hell are you talking about? But this is the highest risk, highest reward entry point when you get a runaway market like this. And so I'm telling you guys, please don't do it. And I got, let me move to this. I've got a couple of slides that I want to share with you guys. Let's do a little share screen. I'm gonna make Mav real small and stick him in the corner. All right, so hang on, hang with me here, guys. Okay, so there you are. You're still there, Mav. You're still there.
Hey.
All right, so here's the question on the table. What if you've missed this rally? What if you've missed this rally? Again, the point here is that nobody's as long as they want to be. That doesn't matter. That's okay. Okay. Everybody's kicking themselves for not getting in at 3K. It wasn't right. And I never saw the capitulation I was looking for, but that's all right. Let's not try to kick ourselves for that. It's not supposed to be easy for this, right? So what if you have missed this rally? What if you're sitting here waiting for the pullback? Well, it's kind of like waiting at the altar, the bride waiting at the altar. So psychologists have been studying traders for decades now, and they found that the pain and psychological discomfort associated with missing a trend was actually several times more intense than that experience just taking a stop on a trade. So in other words, if you just take a normal losing trade, like you enter, it doesn't work out, you take a stop, you're like, meh, whatever. But right now, people are actually they're going berserk today because this has been proven by psychologists to be extremely stressful if you're sitting on the sidelines and watching this. Okay, so I get that. Okay, so we're here for you. So if you miss this rally, you got to be climbing the walls. So what do? Do you just hop on board and you hope for the best? Well, guess what? That's what everybody else is doing. That's what everybody else is doing. And we're telling you guys, don't do it. Don't fall for that, no matter how high this thing rallies, because I'll show you in a minute what's about to happen. So we all know how this ends, right? It's like you jump on board the train with everybody else and somebody's going to get biffed off, right? You're going to lose your spot. It just happens. So we've seen it before. It'll happen again. Markets repeat constantly. If you're scared the BTC is going to go to 100K without you, come on, guys, let's get a grip. Now, perhaps it is. Perhaps it's not. I don't know. We're not here to judge what's going to happen in the future. All we can do is what we see today. So here's some guidance on how to handle this situation. So I've got 5 points. This will just take a couple of minutes, and then we'll get back to the live chit chat once again. Number 1, don't panic buy. No FOMO, fear of missing out. Don't panic buy. I will say it again and again. Don't panic buy into this rally. Most of the gains in the parabolic runaway market occur at the very end. So you're going to see these moves where it just goes slowly, 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 and then it just goes berserk at the very end. So most of the gains come right at the very end, but guess what? So do also most of the losses, right? So we transition a market. For those of you guys that know my fractal energy program, you know that quiet and trending transitions into sideways and volatile. So quiet and trending goes into sideways and volatile, and that's coming around the corner. So for those of you that trade futures, you're going to have a lot of fun pretty soon. This is also where the maximum risk occurs, at the top of a parabolic move. And this is what we call the hairy back. Every parabolic rally has got a hairy back to it. So let's go back to 2017. Let's play the Wayback Machine game here for a second. Now, what I'm showing you is these are fib retracements for those of you that get that. So from the initial swing, what we're looking at is how far back did it retrace before it started the next swing. 61.8% of it. So it gave back almost 62% of that rally. The next big rally came up. Look how quickly it came back. Markets take the stairs up and they take the window down. So for those of you that chase after this market, you might feel good for a day or two, and then you absolutely get curb stomped before the thing goes higher, right? So this one was only 50%, but look how fast this came back down. Again, those that get in at this point up here are going to feel absolutely gutted as you get in. In this case, it was about 8,000, and more than likely you sold out at 6,000 as you puked out your position. This is what happens all the time. We don't want you guys to do that. So for every parabolic move like this, there is a little surprise waiting just around the corner for everybody. So never, ever, ever chase a market higher. Instead, what we want you guys to do is to get the skills to learn how to take the entries before the big move. This is what I was doing in my newsletter last Thursday. I was like, guys, we got a big move coming. Don't know what exactly it's going to look like, but get ready for some big volatility this weekend. Also on Friday, I did a trade school in our members area and said, guys, here's the 3 different ways that we're going to see volatility before this, more than likely this weekend. Hopefully people were prepared, right? So that leads to number 2, which is get a system. Don't do this by feel. The reason that you missed it in the first place was because it either didn't feel good or you were counting on the usually incorrect public opinion. If you're socializing your market decisions through Twitter, you're doing it wrong. You're doing it wrong, okay? Maybe you're using your finely tuned market intuition to navigate this bull. Let me know how that works out for you. Guess what, guys? Market intuition means that you're doing it through feel. And usually what we'd like to do is to trade along with the crowd. Again, that's not going to work for you long term. So here are some systems that you can think about. This is not all of them, obviously, but dollar cost averaging. You can do technical space swings. There's literally hundreds of indicators out there that will give you a swing entry. You can look for breakouts from a price consolidation. You can look for pullbacks. Those work too, although not lately. Trend-based, you can look for trend-based, which is what we call the trend trading or the Donchian channels through Donchian or Darvas boxes. You can do it that way. Guys, there's hundreds of ways to get on board. I'm not going to sit here and get religious about what systems are better than others. It doesn't matter, right? All that matters is that you get a system, that you follow it. Zero of the valid entries will feel good when they show. None of them will feel good. So this is why traders bounce around from thing to thing to thing, right? This is what I see all the time is somebody will try something for a couple of trades. Hey, that doesn't feel good. What about this thing over here? Well, that doesn't feel good either. So they just bounce around from thing to thing to thing. And that's okay if you're trying to find something that works for you. But none of these, I don't care what it is, none of these are going to feel good at first glance. Did you guys really think that buying 9,600 would work out well? It didn't feel very good, did it? So that leads to number 3. We'll be done here in just a minute. I'd like to encourage you guys to scale in. Scale in. Don't drop your whole load at once. This is what everybody does. Like, oh my God, this is it. You know, they put their entire cash balance into a trade, and usually it's right up at the top. And that's just not the way to do it, guys. One of the reasons that you're too nervous to enter is because there's too much risk associated with your entry. It doesn't feel good, right? Because you're trying to put your whole balance in. So please ease your way in. Create a position over time. You don't have to, it doesn't have to be a binary event. Backing up the truck on entries makes for good reading. There's perhaps some people that are out there in Twitter claiming that they've done this, but it's fiction, guys. Or it's by somebody that's about to blow up sooner or later. It's not worth it. Number 4, define your exits before entering. If you ever hear of any classes that I've ever done, any instruction that I will ever do, I call this rule number 1 of risk management, which is to define your exits before you enter. What? Like, if you're going to enter a position, make sure that you know exactly where you'll exit, whether it's to the profitable side or to the downside, right? This is the number 1 account killer by far. So investors don't define their get out levels prior to entry. They are positive, they're optimistic, they think it's going to work out, and then they try to figure it out later in the heat of battle. That doesn't work out. It's almost guaranteed that you will do the wrong thing at the wrong time. You will puke your position out at the very bottom right before it bounces. Been there, done that, and I've seen thousands do the same thing. Now, a lot of you are probably typing in right now, but I'm a hodler. I don't have any exits. Well, I wish I had a nickel for every claimed hodler that bought in at 19,000 a year and a half ago. And then as the price approached 3,000 said, what the hell should I do? I wish I had a nickel for all those, right? You've got to write this down. You've got to give yourself instructions on what to do. And lastly, there is time. There's time, guys. This is not the last rally we'll ever see. This bull is brand new. It's only 2.5 months old. It's just shedding its skin right now. An initial run this strong right out of the gate is unlikely to fail long term. I know that there's a lot of people that are out there making a lot of noise out in the Twitter sphere. They're like, oh, this is just a bull or a bear market rally, or this is going to fail because of XYZ or whatever fundamental reason. Look, I've been around price for the last 22, 23 years. I've been trading markets for that long. And when we have a bottoming move that this is this strong, it doesn't go down and retest the lows. So one of the theories that I'm hearing right now from people that should know better is there is no bear market that has ever not retested the lows before it launches. So in other words, people are out there swearing that any kind of rally like this must retest the lows. Look, I love that. I love that thought. This would be fun. But quite honestly, we're way too high for that to occur. So if we did something like this, yeah, I'd be there for that. And I was looking for this capitulation move, but it's too late. It's gone. It has left the station. If you guys want an example of a market that did not retest the lows, go back to 2009 and look at the S&P 500, or for that matter, any U.S. market index, and all you saw was just one big old V bottom from hell. That was all the way through 2010, 2011, before we had the higher low show up, and that was gone. That was it. So we may have the very same thing going on right now in crypto. There will be really strong pullbacks along the way, which will put you underwater if you chase the highs. It's guaranteed to happen. Taking the tough entries is one of the hardest things to learn as an investor. Taking the tough entries. So FOMO rallies are great, but only when you enter early enough to gain from them. You've got to have the strong hand. You've got to take those tough entries. You got to have a system. And then you can FOMO, NOMO. Any questions? That is all I got for you guys. Any questions today? Okay, let's, I'll put Mav back up to full strength here.
Thank you.
And stop sharing this PowerPoint death deck. There we go. Okay, so let's, if you guys have any questions, park them in at the time. Mav, you got anything? I've been hogging the channel here for the last 20 minutes.
Yeah, I think before the questions start pouring in, one thing to kind of address is there are some speculations, or people are trying to explain away Bitcoin's movement, and one of them was the rate cuts by central banks. I don't know. You're in equities more than I am, so do you have any opinions on that?
Well, look, right now we're in, I guess what I call the musical chairs market. It is. So as long as the music keeps playing, as long as the market thinks that the Fed will rush to its defense and drop rates or do some kind of policy, right? Think about money. So there's this big pile of money that's out there. There's trillions and trillions of dollars, or of, whatever way you want to denominate it, doesn't matter. But there's no shortage of money that's out there. It's got to find a home. It's almost like gravity. It's pulled towards what's called yield. Yield is basically the return that you can make on an investment. Now, when we're dropping interest rates to near zero, right? So if bonds are screaming up, the interest rates are going straight down, not going to make anything on the return of there. It forces money into things like stocks, and or maybe crypto as well too, because certainly there's been quite a bit of yield over the last 2.5 months. All right, so you're not going to sit there and pull dividends out of it unless maybe you're going to do something that perhaps you can address the getting a rate of return on some of the DeFi stuff that we've done.
Yeah.
But this is the type of market. So, everybody is predicting the end of the market, but in my experience, things tend to go to the upside much further than people expect. The bears are always way too early on things. They get it wrong, and they get it wrong for way too long before things finally get clobbered.
Yeah, well said. If we have time, we should go over that CME Fed Watch tool. I thought that was pretty interesting. But it seems like the common rhetoric right now that we need to address is what's going on with alts? Why aren't alts rallying in the same way that Bitcoin is? Everybody feels like they're left behind, and they want their heavy bags to get a little bit lighter.
Well, it depends, right? If you look at the currency pair denominated in terms of Bitcoin, you're putting Bitcoin on a denominator. And there's no prayer for an alt to be able to rally harder than Bitcoin during a parabolic rally like this. But for many alts, if you can get them either through Tether, I think you'd be surprised, or some type of US or some type of fiat denomination, be surprised how actually they're still somewhat strong. Not as strong as Bitcoin. But, everybody is playing, looking for alt season. We're thinking that this is 2017 again. I don't know. I think quality is going to lead this market off the lows.
Yeah, I very much agree. And, especially in a market where BTC is, 60+% dominance. Yeah, it's gonna follow, but also be dictated by Bitcoin's terms. Yeah, I think what we saw in December of 2017 was sort of a push towards alts. But remember that the market was very different back then. The environment was very different. I think we're just in a different crypto space than we were 2 years ago. I'm not discounting that at some point we are going to see a little bit of altcoin action, but I don't know. I just don't think it's going to be the same sort of just like, to the moon every day kind of thing that we saw back then, because there's just a lot of just, you know just a flush with dumb money market. It was just I think people have kind of wisened up to that. That being said, I hear the opinion that, because BTC is often the on ramp of this market, possibly that is the market getting ready to move into alts. We'll see. But yeah, as Doc talked about, there's many different ways this can play out.
There's a couple of questions that are in the chat room, like, well, how do you set a stop? Well, we could talk about price-based stops. Some people talking about indicator stops. Typically, I don't use indicators to form a stop. However, this is a good example of, this is called the trend trading strategy that we have. And this is based on the turtle traders. You guys have, if you haven't heard of the turtle traders, you might want to Google it. So it's an experiment back in the 1980s that they actually made a movie about, called Trading Places with Eddie Murphy. So it was like, could you take an average Joe off of the street and teach them to trade? And so it was kind of like a bet that they had in the back room. And some people did, some people didn't. The people that did were the ones that were able to master their emotions and just trade the signals. The people that didn't were the ones that couldn't, just like what I always talk about. But this is based on Donchian channels. Donchian channels are based on 20-day highs or 10-day lows in this case. And this is a very mechanical system. You don't have to sit there and go, oh, what should I do here? Should I go longer? It tells you, it's like, buy, get in. So it doesn't matter what you think or what you care about. It tells you when to buy. It tells you when to sell. So for those of you that are fairly new to investing, consider a mechanical system and then find a way to get past your own bias. That's part of the problem, because some people get a mechanical system like this and then they can't take the signals because it's like, yeah, but so-and-so told me that everything, and it's like, you got to find a way to take the tough signals that are out there. This is going to define you whether or not you can make it in investing or not, right? It's not an easy game. It's the toughest thing that I know how to do.
Doc, why don't you use the Ichimoku cloud?
Oh, look, I'm a price-based trader. I like to use price because there's no delay in the price. Every other indicator that's out there is a derivative of price and volume. So why delay your signals? It's just, I will use specific indicators, just like Batman uses different tools, right? You're kind of like Batman, aren't you? You can do the Batman voice.
Oh, boy. Only on the weekends.
We're bringing up bad wounds here. Okay.
Yeah.
We're having fun today, guys. I'm sorry.
Oh yeah. I think it's what we need to remind ourselves of is what the space is doing right now, where we're at. What is the goal of why we're pursuing this technology and the adoption, proliferation of it. And not to get too high level here, but as BTC comes back, it is a little bit hype based, but remember how I was just saying, it's a very different space than even 2 years ago. I think a lot of fundamentals have changed over that time. And I think a lot of groundwork has been made to allow us to entertain these higher highs. And yeah, maybe the market's a little bit runaway right now, and it maybe needs a correction to be healthy again, whatever. But long term, I think the movement has proven itself over and over again. This is a technology, this is an asset class that has permanence. It has value. Define it however you want, split it up however you want. Look at alts versus BTC. I don't care. What I care about is is it going to be around in 5 years? And I think at this point we have to say yes. You know, it's clearly proven that it has survivability. It clearly proven that, you know, institutions are I don't want to say lining up at the door, but they're looking at blockchain, crypto technology, distributed ledger technology in ways that they weren't even a couple of years ago. And that's big. Even if, you know, we're not counting on institutional adoption to legitimize the space, but it certainly helps to see that, you know, it's just very different. I think we've grown a lot as a space. We've matured a lot. And a lot of the stuff I see in DeFi and STOs and even, you know, the crypto projects, which have shown to have value over, you know, a really intense bear market, that's awesome. I think this space has the resilience it needs to weather whatever storm or, you know, global financial uncertainty is ahead of us. So it's really cool to see. But yeah, what are you going to talk about on the charts there?
Oh, yeah, sorry. Well, there's a couple of questions coming in. So first of all, somebody's hammering me on predictions on corrections because they're saying, where's the overhead resistance? Now, one of the videos that I did, I believe it was maybe a month ago. I think it was right before we went gallivanting around Europe.
Yeah.
Was I said there's a notion, there's this thing called, and sorry, I'm going to put you in the corner. Put you in the corner again here, Mav. There's this notion called overhead supply. So overhead supply, for those of you that don't know, assumes that, and I'm going to draw this on the screen, which you won't be able to see, but those at home, those playing at home will be able to see this. There's this notion that overhead supply is that people that bought and went long back here are somehow sitting huddled around the fire, living through crypto winter, you know, just waiting for the price to come back up to them so they can go break even and they will buy back their position and go whole again. And then they can say, never again, right? How honest, I mean, how realistic do you think that is? I think it's unlikely to happen. So I'm not looking at these price spikes as resistance over here. And a lot of people are, they're like, oh my God, you know, wait till it gets to 10,000. There's no way it'll get through there. Well, remember, guys, remember what happened at 6,500. Everybody and their sisters said that there's no way it'll get above there. That will be the next lower high setting up in the market, and it just blasted through there based on the number of shorts that we had. So, yeah, could we get a reaction at 20,000? More than likely. But I think before we get to that point, I think we're going to go through a period. I talked about this earlier, that we're going to get into. When you get a parabolic market like that, there's no way I can predict. There is no way, guys, I can predict how high this will go. We could be surprised. It could be just getting started with this, which would be good, right? So just let it unfold. Don't sit there and force your own bias on it. But what definitely will happen, and you can take this to the bank, is that we're going to move into a very volatile corrective period from there. So how far deep that goes, I don't know. But what you might want to consider doing is maybe at some type of fib retracement, whenever we get finished to the upside, sit there with your good till cancel buy orders. Boy, is that going to feel horrible to take those, right? But for those of you sitting there, you know, kind of curled up in the fetal position in the corner saying, I wish I was long, you know, this is how you do it. You're going to have to wait for a decent point to be able to buy in, or look for the price reversal. So there was another question about, like, what is this thing here? What is this indicator? This is part of this is actually just it's a Dacian channels, but they're put together in a different system. So we had actually one of our Omnia customers create a strategy from this that tells you the buys and sells. So that is part of our trend trading class that's out there. That was, oh, by the way, it was on sale last week, but not this week, unfortunately. So that's kind of, I'll undo that and go back to you.
Yeah, there's there's 2 points that I see getting made pretty frequently. First off, that this is a completely artificial pump because Tether printed a bunch of USDT, and so, you know, we're just, you know, patting ourselves on the back like, yeah, we did it. You know, we hodled through the bear market, and, you know, Tether saved the day. And I think that's disingenuous. You know, yes, it might affect the market in some sense, but, there's manipulation in every form, and macro, micro, so what? This space is more about, seeing the limits of where we can take this stuff. And yeah, if, there is some public market manipulation, cool. What are you going to do about that? It's all about, can it survive to the next day? I'm kind of I'm over looking at Tether as a scapegoat for everything. I think it's much more imperative for us to look at the broad scale of things and say, it's not just about what one company or one coin decides to do. This is becoming much more ingrained in our financial systems, in our society. And yes, there are some cases of whales doing whale things, but that's okay. That it's still a very nascent space. It's still a very, we're still growing up. It's not gonna, somehow define the space or negate the progress that we've made. So yeah, ride the storms, ride the pumps, the dumps, whatever. But yeah, you just have a plan. It's okay to try to find scapegoats and everything, but at the same time, you don't have to. You just do what the price tells you. There's another, yeah, where did it go? Yeah, the other thing is the Google Trends interest, and how it's basically a blip compared to where we were in December of 2017. Yeah, I think that's an interesting point to make. But again, I don't think that just like somehow negates this move and somehow invalidates what's going on right now, and to say, oh, this is we're not even scratching the surface here. Or on the opposite side, this is nothing because look at the Google Trends. If someone was searching for Bitcoin in 2017, they're not going to be doing that again in 2019. They've already learned about Bitcoin. Yeah, sure, we would still see an overall trend, I suppose. But we don't need to have public validation of what the market's doing. We can see it. So yeah, if the trends go upwards, I'm sure the market will go upwards too. But we don't have to explain away everything just because it seems like it's correlated. It doesn't have to be. Yeah, I think this is still a very wild free market, and it's kind of fun to watch it grow up. And we can do the best we can to speculate on these things, but ultimately no one knows. This is a million different decisions in a million different ways make up what the crypto market is, and I think that's a really cool thing to see. And we do the best we can to react to it and stay proactive. But this is still a very early stage, very early space. So all we can do is just look to the future. But yeah, take it away, Doc.
Some of, there's, I don't know how deep to get into this here today, but one of the problems that we have as human beings is that we all have a cognitive bias. So this is why a cognitive bias is basically the reason why you can have a car accident, boom, two cars meet, and both of them see what they want to see, right? It's called confirmation bias, that, hey, I did this, and no, I disagree, you did that, and that's why we have courts and things like that. It's called confirmation bias. You will see what you want to see. And this is not only in car accidents, but also politics. We will see in the other camp what we want to see, or from our camp what we want to see, whatever, my team is better than your team kind of thing. Confirmation bias occurs every single day, and then it's just a matter of how it gets pumped in the news. But confirmation and bias in trading is something that I want to make you guys aware of, and is fatal. It's fatal. So here's how this happens, is that somebody tells you something that's on social media, right? And we're all on social media. We all listen to all kinds of, there's never been a time in the world that it's been so easy to find hundreds of different opinions on any topic that you want to. Wow, did we just get a huge move to the downside? And
it's your fault, Doc.
Yeah, I'm talking it down. Oh my God, it's not my fault. I didn't do it. So, and then what happens is you're going to resonate with one person. You're going to resonate with, somebody that's out there. And what happens is then once you kind of tie yourself in with that person, then you're basically going to look for any confirming information that goes along with what that person says. And this is called confirmation bias. And sometimes it can work out for you, but most of the time it actually works out to your detriment. So understanding what could possibly, like thinking independently and not thinking with the crowd is what's going to help you. And that goes against everything that we think, right? Everybody that's out there right now, hey, what should we eat tonight? Let's go to Yelp. Let's go look for the 5 stars. That's based on what somebody else thinks, right? And that works. That's valid for that opinion. But when it comes to markets, you almost need to learn to shut out other people's opinions and form your own on what's happening here. Because if you follow along with other people, you're going to be part of the crowd, which is getting faded right now to the downside. Yeah, even live feeds like this can be, like I'm not sitting here trying to influence anybody. I'm not trying to say, hey, it's going to go higher or lower. I'm saying be careful right now. That's my main message right now is don't chase after this. Be extremely careful and take the difficult entries. Don't take the easy ones that everybody else is out there talking about. I'll go ahead and share this chart while you bring up your next point.
I got the BTC alarm going off. Yeah, this is actually kind of fun to watch in real time. Here we go. Yeah, this is.
No, don't be too scared. That's a 12-minute chart, right? So that's just that's a 12-minute chart. So this is not a weekly chart or something like that. But man, that thing is, we're moving from 13.8 down to a 12.4. So that's a 1,400 point move in the last just a few minutes here. So that is the perpetual inverse swap contract, which is on BitMEX. If I go out to something like Coinbase, it's going to be a little bit less.
Someone's saying that it's down. It's working for me.
Yeah. So it's just, this is what's going to happen. I'm telling you guys, when you have a parabolic market like this, you're going to go from quiet and trending where every pullback gets bought, pump, right? And then you're going to move to a very, very volatile market where it just becomes unhinged. So you're going to see something move towards, and if I let's go out to a daily chart just to get this thing. So you can barely see it right now, but there's a topping tail on here. So what you should see is in time.
Doc, stop dumping the market.
Yeah. What you should see in time is you should see something like this, right? You'll see the market go from a quiet and trending into sideways and volatile. This is what always happens.
Oh, man. This is kind of fun. We should get the marshmallows out. Oh my gosh. All right. Yeah. Coinbase or BitMEX are down or something. Something's going.
Yeah. I'm talking my book. I'm trying to get everybody to pump into so I can sell into y'all. I love it.
Man. You guys are savage.
So what else? You guys don't want to sit around and listen to us yak all day and laugh at each other. So let us know if we have any other questions. And yeah, bye Coinbase.
Oh boy.
Yeah, I'm pumping and dumping market.
Oh,
yeah,
man.
I'll put that on my resume. On June 26th,
single-handedly brought down the market. You crashed Coinbase and BitMEX in one fell swoop.
In one swell foop, I did it all.
Bias confirmed.
Bias confirmed.
Oh my gosh.
Because you're Batman.
Yeah, I mean, someone's bringing up the point. Like we said it earlier, like, it probably will correct, and that's healthy. And that's okay. This is, as it's shown many times throughout the bear market, this is a volatile asset. It's going to do what it's going to do. And that's okay, because the larger trend's intact, I feel. We're still a year away from the halving. We're still barely scratching the surface of regulatory on-ramp, institutional, sort of players getting into the game, true adoption. And, like, what does a world look like when 1% of the global finance is, based off cryptocurrency or blockchain? I don't know, but I'm excited to find out. We're still like very, very early in this space. We're still very early in this game. And yeah, I don't know. It's still like such a joy to be a part of. I don't know. Like, it's always interesting, that's for sure.
Let's see, any other questions here?
Oh man.
So
Yeah.
some people, some people are in the chat room going, "Look, I don't really care. I'm just going to hold no matter what," and that's fine. Again, you have got to determine your own approach to this. So the true hodlers are going to just sit back and go. They're going to turn off the screen and say, "I don't care with the volatility. I've got a long time horizon. I'm going to be in this for years, and I really don't care what's happening today, even though this is fun." Not everybody is in that camp that has years and years and years. There's going to be some people that are active traders that are going to look for swings, just like, I'm going to trade something as long as it goes up, and I'm going to back away when it starts going down. So active trading is also one way to do that. You can also narrow down your time frame to intraday if you want to. You can be totally flat. You can go to sleep at night flat, no cash in the market, right? So it's you've got to find your own approach that makes sense for you, and then just ignore all the other noise that's out there.
Yeah.
Doc's the whale.
Get out the pitchforks and the Bitcoin forks. We found the whale.
There's not one financial market that's in this world today that's not manipulated in one fashion or another.
Mm-hmm.
And if you guys out there had enough coin, you would do exactly the same too. You would use your position, your majority position, to be able to influence the markets that you invested in. You would all do it. I don't care how pious you all claim to be. You would all do it. I know you would.
You guys should see what central banks do. It'll blow your mind.
So, well, maybe we should close down this webinar before we affect the market anymore.
we crash it even more.
Yeah. So we'll have to put a new thumbnail on the day that Ready Set Crypto crashed the market.
I'll put that on my resume too.
Hey, well, let's talk about what we're doing as a company for our folks.
Yeah, we're doing some cool stuff other than crashing the market, of course.
Hey, talk about the on-chain analysis that we're doing lately.
Yeah. So if you guys haven't seen it already, definitely go watch that video from Monday. We just brought on a new member of the Ready Set Crypto team. He goes by Checkmate. He's obviously Australian. He's a master of this on-chain analysis and like looking fundamentally, can you sort of understand based on what the Bitcoin network is doing or sort of the metrics inherent in it, what it's going to do next and how we can use on-chain analysis to look at price and sort of understand almost like in a fundamental sense, like close to TA almost. It's kind of interesting. I think there's so much to learn there and to better understand what the Bitcoin network is doing and how to interpret that. It is very esoteric. It's very dense stuff, but at the same time, it's this like really interesting kernel of like, this is, you can, like we've seen, it can predict, or I won't say predict, but like it kind of, you can almost put like guidelines as to what the market's going to do and how the Bitcoin network is going to grow, and just lots of really interesting metrics to come out of that. So yeah, we're definitely going to we're doing a class on that, and we just want to make sure that it's accessible and that it's as oh man, that is not good. Oh my gosh. We were just talking about manipulation, and of course now I'm going to say it on camera. Like people are going to say like, oh, Coinbase like took themselves down to crash the market.
It's not my fault.
Doc crashed Coinbase. Yeah. So yeah, well, that is a surprising turn of events. I know they've gone down before. It's not the first time, but it's always at the worst times. Like I remember back in summer of 2017 when GDAX did that like spike to the bottom on Ethereum and just like totally like blew up the market doing that. Yeah, it's this is the problem with centralized exchanges and their influence over this market. But it's going to take some time to wean ourselves off of that stuff. It's just a developing industry, and that's what's going to happen. Yeah, wow. A lot happening today, guys. It's kind of fun that we're doing all this live.
Didn't I just say like half an hour ago, don't chase after this market?
You did. You did.
It's I can prove it. So pumper and dumper, there we go.
Oh man.
Okay. So hey, do not forget, if you want more quality chit chat like this, if you want if you're struggling with your own directions, join us at Ready Set Crypto. We've got an excellent community. We've got well over, what do we have, 13 classes on like how to get started, how to trend trade, how to use technical analysis, how to secure your coins, all of that. So
even fun stuff like security tokens and DeFi,
security tokens, DeFi. We're building a new master class on this whole notion that Mav just talked about of on-chain analysis, which is something that very, very few people are doing. And we're going to be at, I think we just sort of confirmed that we're going to be in Bali here in a couple of months. So, we'll figure that out. So, don't be shy. Join us. Join our motley crew over at Ready Set Crypto. We really do have a fantastic community that's over there. Very helpful and very knowledgeable folks. A lot of them much, much smarter than I am.
But not as big of whales.
yeah, but I'm the biggest whale, right? Yeah, okay.
Yeah, we do have a Discord. That's sort of central to what we were trying to foster is like just the highest quality like community out there. We're not about like shilling. We're not about like chasing pumps or anything like that. We are trying to have the pulse of the markets and what's going on. And hopefully you guys being a subscriber to this channel, thank you, by the way, can see that is our prerogative. We want to push the space forward. We want to be like right at the forefront of like what this space is about, what it's doing, how do we get adoption, like just these big questions that are really exciting to be a part of. I suppose it's such an awesome space because it represents so many different things, but at the same time it's all about innovation, it's all about disruption, it's all about evolution of our financial systems, of just the way we orchestrate a lot of these things in society. So we're just really proud of what we've done, what we've built, and together with you guys, you've helped make this happen. And that's our promise to you. Like, we want to continue to do this, to give you the best YouTube channel out there for crypto, to continue to post as much content out there as possible. So yeah, if you would like, definitely come check out our website. If nothing else, get on our free newsletter where we just kind of sum up what's going on with the news and what you should be paying attention to. That's just on the homepage at readysetcrypto.com. But yeah, it's we love doing this stuff full time. It's so much fun to be a part of this space.
Yeah, and we've even seen we've just found a new hobby today, which is crashing exchanges. So this is, you never know what you're going to get when you come to Ready Set Crypto. So hey guys,
Right.
so thanks for hanging out with us. It's time for us to, we don't want to overstay our welcome here, so it's time for us to say bye-bye. So thanks everybody.
I will definitely make a video regarding why it's crashing. We still have to look. It's yeah, but thanks for being a part with us today, and hopefully ride the wave, guys.
All right, see you everybody.
Take care,
See you
guys.
guys later.